everyone. Welcome to Elevate Your Wealth. I'm Casey Elkins, co-founder and managing partner of Elevated Financial Management. We've got a great show for you today. We're really excited to have you here. I'm with Mark Stimson, my friend, father-in-law, and business partner. How you doing, Mark?
I am doing really good. I'm excited to be with you again. I think we've got an episode today that our viewers are going to find very, very interesting and give a lot of promising thoughts and ideas to that your retirement can be what you've always dreamed and hoped it would be.
Yeah, and I think that's really important. That's what we want to focus on, right?
Yeah.
We want to talk about the positive things. We want to talk about the things we can control in retirement, and maybe what we can also talk about is the fact that there's so many different avenues of information, right? There's so many places that we can get information from. We see lots of different stuff on the news day to day, in the media, whatever it may be. And if we rewind a little bit, if we go into 2022, there was lots of talk of, as we entered 2023, that the economy would have a quote unquote hard landing, right? Meaning that things would be pretty tough, right? Potential recession, talking about market volatility, inflation, taxes, all of these things kind of coming to a head at one point. And so lots of concerns surrounding that, the job market, all these different avenues. And so the general consensus was that there would be a hard landing. Well, recently, as we've entered into 2023, we've actually heard a little bit of a different story that now many are expecting a soft landing. And so that sounds like a positive thing. But what we really want to point at is that because we've got two different opinions coming from the same individuals, right, just in a different time frame, does that mean that we can't trust what they have to say? Does that mean that the information that they give us is not valid? What would you say to that, Mark?
You know, if no one can truly predict what's going to happen, and there's a lot of truth in that, right? Nobody knows. It's kind of like those that want you to believe that they can time the market. Well, that usually doesn't work out very well for most people that try and do that, right? But, you know, the point is, if nobody really knows what's going to happen to a 100% degree, right? We need to have a plan then. That's the point. You've got to have a plan that's going to allow you, based on the different things that may or may not happen, allow you to pivot, just like a lot of us had to do with COVID, right? We had to pivot when it came to business. Maybe we became very familiar with Zoom, right? And Zoom meetings. We've got to do that when it comes to our plan. And so, because none of us are going to be able to predict exactly what's going to happen. And last year is a perfect example of that. Bonds right now, and we'll talk more about this, there was nowhere to run. Bonds and stocks were falling, and interest rates were rising, which makes the bond world not so attractive. And so if you had nowhere to run, what's the average retiree supposed to do? Right? And so again, we're just emphasizing the true need to have a plan, a written plan, so that you can figure out exactly what to do when different economic cycles hit us. And they're always going to do, it's always done that. That's the way the financial markets have always been. We're having a tough time right now.
That's right. So we've got to have contingencies in our plan, right? We have to understand how different things will affect us as they come down the line in our retirement and what we can do or what we've already done to prepare ourselves for those things. I think another example is if we rewind to when Trump was elected. Just before Trump was elected, not all, but the majority of the financial firms, the big names, were indicating that if Trump would be elected at that time, that the markets would fall. Some of them went so far as to put percentages on it, 7, 8, 10%, possibly more, that the markets would struggle, those kind of things. Well, now with with hindsight, we can look back and say, well, that's not what happened. The market actually took off, right? And the market went on a bull run and has done very, very well, which is the exact opposite of what we were hearing. And so that being the circumstance, it's not that we're being intentionally misled. It's not that somebody has ill will or is trying to put us in a bad spot. But ultimately, as you mentioned, we can't look into the future. We don't know what's going to be there. We're being given the best estimation of what the future will bring based on the current information. And so really the point being there is that when we think about what's going on, when we think about our retirement, when we think about our future, we don't know exactly what's going to happen, right? And so again, That's the contingency. We have to understand what our options are, what our choices are, and really have that discussion to make sure that we know what we're looking at down the road. So,
Yeah.
oh, Pete, please
Well,
go ahead.
I was going to say, in connection with what you just mentioned, Casey, and I want to read this right here. We know BlackRock, if you've done much in the investing world, BlackRock is the largest money manager in the world.
They're huge.
Okay, they manage more assets than anybody else. Okay. Listen to what they said. They indicated in their 2023 global outlook that the future that we need to all look to is going to be very, very different. And how so? We don't see the sustained bull markets of the past. So they're not believing that we're going to be looking at a possible 7, 8, 9, 10-year bull run. That's not their belief. Now, are they 100% sure that's going to happen? Well, I think we all know the answer to that, right? That they don't know that. But the point that they're trying to get all of us to understand is a new playbook might be needed here, right? And we're in that camp. We very much believe that you need a different playbook. Casey, in another segment on another show, talked about target date funds. The closer we get to retirement, a target date fund is going to have you be more in bonds than in stocks the closer you get to retirement. Well, we're not in that camp right now. We don't believe bonds is a good place to be putting our money because interest rates are on the rise, and it looks like they may continue to rise. The Fed is raising rates right now because they're trying to get a handle on this runaway inflation. How's that working out for all of us, right? And so again, and there's talk about even the government can't get the debt ceiling raised, and there's talk about a possible default on government payments. Well, we all know what that means if that were to happen, right? So we can talk about these negative things, but again, we want to focus on the importance of a plan. If you've got a plan, then you're going to be able to deal with these different market conditions as they start to occur.
That's right. And so we have a special offer here for our first 10 callers today. Those that are willing to pick up the phone, get off the couch, make that phone call to us. We're offering a written retirement plan put together by a certified financial planner. That's going to include the risk that you're taking, where your income is coming from, how taxes are going to affect you, among many other things that we talk about right here on the show. Please pick up the phone, 844-342-7142. It's a no obligation, complimentary sit down with Mark or myself, and we will build that plan just for you. We're going to talk about a lot more retirement pitfalls, things that are going to come up in your retirement that we want you to be prepared for. Don't change the dial. Come right back to Elevate Your Wealth.
Call 844-342-7142 for your own complimentary written financial plan with Risk Report. Why take unnecessary risk when you don't have to? At 65 years old, would you drive to the grocery store at 100 miles an hour if 40 miles an hour would get you there safely? When nearing retirement, are you still driving your investment accounts like you're in your 30s or 40s? Have you changed your investment elections since you first chose them in your retirement accounts at work? Call Casey, Mark, and the team at 844-342-7142 for your own investment risk report and written financial plan. Do you know exactly how much risk you're taking in your investment accounts? Now that you've accumulated a nest egg for retirement, you want to be certain the risk you're taking in those investments matches your goals and objectives. Call Mark, Casey, and their team at 844-342-7142 for your own complimentary risk report and written financial plan, or use the QR code below to begin scheduling your appointment. You may not have time to recover from taking too much risk.
Welcome back to Elevate Your Wealth. Again, I'm Casey Elkins. This is Mark Stimson. Mark, we're talking about a number of different things that retirees face as they move towards retirement. That's pre-retirees, right? If you're 5 to 10 years from retirement, that's a retirement red zone. So what happens in that time frame could potentially affect somebody for the rest of their lives, right? And so we think about market volatility, everything that's going on. And we've seen some folks that have been so concerned about the market that they've moved everything into cash potentially, into a more conservative position. And we'll just say there's nothing wrong with being conservative. We don't have an issue with that, right? But we want to be strategic. That's really what it is. When you think of sports, you're a big sports fan. I know that to be the case. And so the coach has a plan. There's a strategy. There's something in place to make the team successful successful. And if we're just reacting to what we hear on the news, we're really not setting ourselves up to be successful as we approach retirement and as we move into retirement. So why is it so important for somebody, when we think about stocks, when we think about their investments, why is it important for them to not react so much as the market changes?
Yeah, and see, what ends up happening, especially when we see downturns like what we've experienced this past 12 to 14 months, our emotions get involved, right? And when our emotions get involved, what usually happens, right? I think most of us would probably agree, we don't always make the best decision. And that can definitely be the case when it comes to financial planning, especially with our stock accounts, right? You mentioned we get worried, we get concerned, we get anxious about what's happening. And so we may pull all our money out of stocks. Well, we can tell you as planners, that is not a good plan. That is not something we recommend to anybody that we work with. We are going to look at your age. We're going to look at exactly where you're at, and then we're going to base a plan and we use a scoring system called Riskalyze that helps us determine the amount of risk that each client is willing to take. And then we're going to make adjustments based on their risk score that's going to help us develop a plan, but it's always usually going to involve having some stocks or mutual funds, whatever it is that you like. We don't want you to come out of that, because if we get so conservative, how are we going to do when it comes to inflation? Like right now, what's happening? If we got all our money working at 1 or 2, even 3%, that can be disastrous over a long period of time, right? Because right now, we know inflation, they don't want to tell us this, but it's double digit. It's been bad this past year, and all of us know that and understand that. So you've got to have a plan, which usually will involve some sort of stocks to help us to stay ahead of inflation, which is critical to smart planning.
That's right. There's a balance to strike, right? Because we don't want to be so reactionary when it comes to our investments that we're buying on the hot stock tip that we saw online or that we heard about, and then we're selling because there's volatility and we're in and out. Those type of things really is a recipe for disaster. But we also don't want to have too much in stocks either, right? So just the same as anything in life, there's a balance that we need to strike to make sure that we're going to be successful. You can have too much of a good thing. Stocks are a great thing. They can provide lots of growth for retirement and really help set you up in a great way. But having so much in stocks can also be a detriment, to the point that we're taking unnecessary risk, and we're taking risks that maybe we're unaware of. And I think that's something that I know I see quite a bit. I know you do when we meet with folks. And we talk about that quite a bit, that people are taking risk in their portfolios that they're unaware of. They really don't understand the true risk of their investments. And it's something that they're thinking there's a level of diversification because they're in different funds and things like that. But realistically, it really is leaving them open to more risk than they're likely comfortable with. And that's something I know you see quite a bit of as well.
In fact, I'm just going to share a quick story. I had a client that was a referral from Costco. She was retiring. She came in with her son. I asked her, how much do you have right now saved up? And she said, I think around $1 million. I said, that's excellent. Well, by the time I was done doing all the putting together of all of her assets, she ended up having $3 million. Now, can you imagine having $2 million that she didn't even really know about?
That's a nice
good
surprise.
Problem, right? But it also was all based on Costco stock, where she had worked for the past 38 years. She decided she wanted to sell because she wanted to now recoup and pay the tax, the capital gains tax, at probably the lowest rate that she's ever going to see. And that's exactly what we did. We held out enough to cover all the tax liability on that. So she took a lot of the risk off the table, because you mentioned the problem with individual stocks is it can be very risky, right? You're not diversifying that pool very much if you own 1 or 2 company stocks. Now, we can have an emotional attachment to that, which is okay, but how much do you have in that one stock? That's really what we have to determine that's appropriate for your situation, which I believe very much should be based on your age.
You know, let's talk about that a little bit more, diversity or diversification inside of our investments. And I think it's something that you know, we can understand that we likely don't have much diversification if we only have 2, 3, or 4 stocks, right?
Right.
That's pretty easy to understand. But where there's a lot of misleading information potentially is the big, beautiful pie chart that everybody gets on their statements, right?
where you're going.
You got 10, 12, 15 different colors in there, and I'm in this sector, and this investment does this and that. And ultimately, when we do an analysis, what we see is that those different funds that folks have, right? A lot of those funds have very similar holdings to the other funds. So those funds hold stocks and bonds and things of that nature. And if your top 10 or 15 holdings in this fund are similar to the top 10 or 15 holdings in this fund, you really don't have
Yeah,
diversification.
they think they do, right? We
That's
call it
right.
overlap.
Yeah, so your money's in different places,
Right.
but it's not truly
No,
creating
exactly.
diversification. And the whole key with diversification is that it's supposed to protect us when things don't go the right way.
Right.
But if all of our investments do the same thing, even though they're in different buckets, if they all do the same thing, that's not really diversified, right? And so that's absolutely something that we have in our offer for our folks at home. We're the first 10 callers that give us a shout, that pick up the phone and dial, are going to be able to take advantage of that. Would you share more with them, Mark, about what they can expect?
Yeah, what we are going to do for the first 10 callers is we're going to create a customized retirement plan for you that's done by a certified financial planner. And I want to really stress that. It matters. Certified financial planners have a lot of training. It takes a lot to become a CFP. And those are the ones that are going to design your plan based on your individual tax, income. We're going to look at health care for you. We're also going to look at your budget, cash flow analysis, and then we're also going to look at your legacy planning that you may or may not want to do. So based on your situation, we're going to design a plan that's going to give you the confidence to retire and have the retirement you've always planned on. So please pick up the phone, 844-342-7142, because this plan is going to be done absolutely at no cost. So please call 844-342-7142.
Thanks very much, Mark. Again, for those listening at home, for our first 10 callers, we're offering this complimentary, no obligation. Please take advantage of it, 844-342-7142. You're listening to Elevate Your Wealth. We're going to talk more about retirement pitfalls, things that are going to come up in your retirement, and what you can do about them. Don't change the channel. Come right back.
Call 844-342-7142 for your own complimentary written financial plan with Risk Report. Why take unnecessary risk when you don't have to? At 65 years old, would you drive to the grocery store at 100 miles an hour if 40 miles an hour would get you there safely? When nearing retirement, are you still driving your investment accounts like you're in your 30s or 40s? Have you changed your investment elections since you first chose them in your retirement accounts at work? Call Casey, Mark, and the team at 844-342-7142 for your own investment risk report and written financial plan. Do you know exactly how much risk you're taking in your investment accounts? Now that you've accumulated a nest egg for retirement, you want to be certain the risk you're taking in those investments matches your goals and objectives. Call Mark, Casey, and their team at 844-342-7142 for your own complimentary risk report and written financial plan, or use the QR code below to begin scheduling your appointment. You may not have time to recover from taking too much risk.
Hello and welcome back to Elevate Your Wealth. Again, I'm Casey Elkins here with Mark Stimson. Mark, we're talking about all those things that folks are dealing with as they approach retirement, as they're in retirement. And something that we see quite a bit is that folks maybe underestimate how long their retirement will be, right? And I think the concern of that, or the issues that that can cause, is fairly apparent to those listening at home. But when we think about that, we know that life expectancy is getting longer. And so this really is something that is becoming more and more of an area that needs attention. Living a long life is a great thing, but if we don't have the money, if we don't have the income, if we're not set up in the right way to support that longer life, that's potentially a big concern, wouldn't you say?
Yeah. In fact, Casey just mentioned something that I believe, is probably one of the most critical areas of income and financial planning that's not addressed by the big box stores. The amount of time that we're going to live can adversely affect so many things. We call longevity risk the risk multiplier, right? Well, what does that mean? Well, the longer we live, we could have a much higher likelihood of needing long-term care, right? The older we get, the more likely it is that a very high percentages of us are going to need some form of care before we pass away. What about the risk of going through, Casey mentioned this, we've talked about this in different segments, but what about going through 5 or 6 bear markets, not bull, but bear markets during your retirement? Yeah. We know can be devastating if you don't have a plan for when that bear raises his ugly head. What about, inflation risk? Well, I think we all can understand how that's affecting us right now. We want it to go down, right? But we know the economic cycles go up, can kind of go down and then plateau and go back down, right? And that's always the way it's been, and it's always the way it's going to be. So do we have a plan to address, especially now, what I call longevity risk? Because it can create a lot of other problems that a lot of retirees don't want to talk about or they don't want to face. And that it can be a devastating problem if you don't talk about it.
Yeah, it's, longevity risk really is just exposure time, right? That's what it is. When we think about anything in our lives, there's certain risks involved with everything, right? And so when we think of retirement, there's 5, 6, 7 different areas of risk that we talk about, ones you just mentioned, but the longer our life is, the more time we're exposed to those things. And so the more potential there is for a train wreck, I guess, in retirement, we could call it. And so we really have to be prepared. We've really got to understand what our true life expectancy is, make sure that we don't outlive our money, right? Because that's the last thing that we want. It's something that nobody wants to have to go back to work 15 years into retirement because they see that things are not going the right way because they didn't have a plan, right? Because they didn't build something solid for the future. So we have to consider these things. It's maybe something that's not always fun to talk about, right? And we can understand that, but this is real life, and this is something that we want to make sure everybody is prepared for. We can't leave this type of stuff to chance. As a matter of fact, when it comes to planning, maybe we'll just touch on this real quick. I know you recently went skiing, right? You took a ski trip. Now, you were gone for maybe 10 days, 8, 9, 10 days, something like that. How long did you plan that trip for? Did you just plan it 2 days before you left, or how long did it take to plan the trip?
There was a lot of planning, and I'm glad you're mentioning this, Casey, because what we see when it comes to this, people are willing to spend 2, 3 weeks planning a vacation that's going to be over in a week or 2 weeks' time, but they don't want to spend any time doing any financial planning for retirement that's going to last 20 or 30 years. And when you really think about that if you're watching the show today, because you need to worry about that. You need to plan for this. So you got to be willing to spend some time to do this. There's an old saying that I've used in my family for years now. We do what we want to do, right? And the problem is, talking about retirement subjects isn't the glossiest thing to do, but if we don't, it can really cost us in the long run.
That's right. So you spent a few weeks planning that vacation, and it was successful. You had a great time. You came back, and everything went well. But undoubtedly, with that plan, things were not so rigid in your plan for that trip that if one thing didn't work, it just ruined the whole vacation,
exactly.
right? You had contingencies, you had adjustments. If we had bad weather on a particular day, you could make a change as to how you did things. That's the same in your retirement plan. You have got to have a good plan for the future, one that has contingencies for when there is bad weather in retirement. And living in Seattle, we all know something about bad weather, right?
There's going to be some bad weather, right? That's just the way it is.
Yeah. I think something else, and maybe let's touch on this too, Mark, is when it comes to spending. Now, whether we're before retirement or we're in retirement, we probably all spend too much. And if you ask my wife, she'll probably echo those thoughts. But ultimately, the deal is that we need to have a budget. We need to understand what we're spending. Not that we have to live tracking every single dollar, but we need to know where our money's going. We need to know what we're spending and potentially understand that so that we can rein it in if we need to.
Yeah, in fact, it's funny you mentioned that about tracking every dollar. I have, Casey's heard me mention this many, many times in my workshops. We talk about it on the radio show and the TV show. When you get ready to retire, because some are good about a budget, others are not. But one of the things that I find very successful is to have a client keep a little spiral notebook maybe in her purse or maybe in the glove box for a man. But every penny that you spend for 2 months, you're going to track. If you go get a coffee at Starbucks, you buy your sandwich, you pay XYZ bill, you put XYZ amount of gas in our car. We're going to track that because what we found, that amount of money ends up being usually much greater than what the client tells you that they're spending on a monthly basis, right? And if we don't have that number down right, is their plan going to work? Not if they're basing it and they need another 1,000 or 1,500 a month that they didn't know was going out. So having a written plan and knowing exactly what your cash flow is each month is critical to having a successful retirement.
Yeah, and I think this was pretty interesting. I'm going to read this to make sure I get it right. But there was a study that showed that 46% of retired households spent more annually in the first 2 years of retirement than they did just before retiring. Right. And so I guess the point really being here is that if you don't have a spending plan, if you don't have an income plan, if your advisor has never spoken with you about an income plan or about what your budget is, if that's never been reviewed one-on-one with your advisor to help them understand where you're at in your life, you're really not setting yourself up in the best way for retirement. So that being the case, we include an income plan in our offer for all of those at home. And so we just want everybody to understand that for our first 10 callers, we're going to offer a complete written financial plan put together by a certified financial planner. We're going to talk about your income in retirement, what taxes will look like for you in retirement, what type of risk you're taking and what you can do possibly to mitigate that risk. Is it comfortable? Oftentimes we see that folks don't understand the risk that they're taking. We'll talk about healthcare with you. We'll help lay out that future in retirement specifically for you. And that's the key because this is unique. This is different for everybody. It's not one size fits all. So please pick up the phone, 844-342-7142. It's no obligation, completely complimentary. As Mark has said before, what you see on the show, what you hear on the radio, what you see in our workshops is exactly who we are. We're normal folks just like you. I'm not a TV host. Mark isn't either. We're just here to help all those that walk through our door. So please take advantage. 844-342-7142. Mark, it's been really nice being here with you. We hope that everybody at home has enjoyed it, has learned something. That's always our hope. And so please come back next time. We'll see you again right here on Elevate Your Wealth.